We have some remote areas here in Montana and communities that are lower income. In Thompson Falls, we recently had an older couple who needed to travel to Missoula for medical care on a regular basis. This is probably about an hour to 2 hour drive, depending on traffic. They came in with a vehicle. It had high miles, but it was well within their budget. Our MSR, Kate, was able to show them vehicles that they could afford using the AFG product. We call it the Flex Loan here at Whitefish. And they were completely amazed and surprised that they could afford a vehicle that was 5 years newer than what they had originally been looking at with much lower miles. We were able to close that loan, and the members came back in to thank our MSR, and they were in tears. They were so thankful that we were able to help them get into a vehicle that would be reliable and able to take that worry of traveling for those medical appointments and having a vehicle that would get them there safely off of their list and really be able to focus on their health, which is the most important for them at that time. So this is a story that we hear often where we have people coming in, they might be payment conscious, they have a vehicle that they're looking at, and we really train our MSRs to talk about other options that they might have.
So for our members, where we live in on the East Coast. We get a lot of snow. Our members love SUVs. We're truck driving people. And as you know, those prices have been going up and up and up, and it became unaffordable for a lot of our members. And this program made it something that made that dream of theirs to own a SUV or own a truck very doable, keep it in their budget, and to also take it for a shorter term because we had these members who were turning over these vehicles and they were carrying a lot of negative equity because they depreciate as soon as you drive them off the lot. And this helped a lot of our members to not only afford the truck that they want, but also to not carry that negative equity over into their new deals.
And it also helps with the debt to income. So recently I've had a loan, maybe it was 65% DTI. It's a decline, but I said if you give them the payment saver loan option and tell me what the residual is, then the payment is much lower and they're able to afford the vehicle when otherwise they wouldn't be able to in a conventional loan.
And back in 2016, affordability was a key, but now it's even more with everything that's going on within the economy, rates jumping, unexpected expenses. It is a huge affordability product. The payment savings that it can gain your member, it's just huge.
Recently, we have had obviously, some economic turmoil within nationwide where consumers are paying more for their goods and services. They're paying more in interest on their auto payments and more in interest on their housing payments. And just the cost of eggs and milk and everything else is just causing our members to really have to take a look at, do I buy groceries or do I pay my auto payment? And here at Northland, we don't want our members to have to make that choice. We want our members to be able to get into an affordable payment and a good, reliable vehicle, and also be able to take that money that they're saving and buy groceries or things for their kids or invest back in their communities. So, the AFG program has been a game changer for us, especially this past year. I'm communicating with all those loan processors more than once a month on tips and training and tutorials and how things are going. And then also capitalizing on showing our members and our staff how much money they're actually saving those members in payments each over the life of their loan. So, for example, up here in northern Michigan, we need a lot of trucks. So we need bigger trucks. They typically end up being higher dollar loan amounts. And, some of those members were saving $25,000 in payments over the life of their loan. And when you then relay that back to the teams and say, hey, Susie just saved her member $25,000 over the life of their loan, that really makes an impact, and that can really change your story on how you're presenting that product to that member. And if you look at it from a macro perspective, so how are those savings? So Northland, for example, we quantified the amount of savings that we saved all of our members last year. And in 2023, we booked about 24 flex ride loans. And then in 2024, we increased that by 200%. So we increased that to up over 85 flex ride loans that we booked in 2024. And the great thing about that is now we're able to quantify the amount of savings that we saved our members. We saved our members over $1.1 million in auto payments over the life of their loans. And so that's something that we're able to proudly talk about to our members. We talk about that with our team members. We also are able to think about how that impacts our communities, because it's not just about how much you've saved that member. So you save that member, those members, $1.1 million, they're now able to take those funds and reinvest them in our communities. So this program, although it seems like it's a small part of our product lineup, it really is making large impacts, because those dollars are able to go into our local businesses. They're able to pay for food, groceries, utilities, back into the schools, back into the healthcare systems, all of those things that we're impacting with just this one program.